Hello and welcome to this Friday's morning market briefing. We've got a lot to talk about, but firstly, Nvidia to make $12 billion from AI chips in China this year, despite US controls. As well as that, ECB minutes revealed doubts over rate cut. We've got lots to talk about on the charts, also with lots happening on the economic calendar, but we'll come to that near the end, so make sure you stay around so you can see that. Before we get straight into it though, make sure to subscribe. But the first article to talk about is to do with Nvidia and their chip sales. Now, Nvidia is now on course to sell $12 billion worth of AI chips in China this year. This comes despite the significant US export controls that have been placed on the semiconductor market out of growing fears, that such chips are being utilized for Chinese military purposes. Now, of course, this is a topic that we're always covering. We've been covering the AI revolution, as many people have kind of termed it, and we've seen the growth of the likes of OpenAI and their ChatGPT AI models, and we've also seen the likes of Meta's own models and Google's own models, which have also been published. So we've really seen these tech giants race to compete, race to kind of produce the best AI model and edge themselves closer to the AGI kind of era. Ultimately, though, Nvidia's really been the one tech producer, I guess you could say, that has really benefited from all of this competition. As we've seen, the growth of AI as an industry, ultimately, Nvidia has been the kind of company acting as the powerhouse and the foundations for this industry to grow. As after all, Nvidia are really the ones that are producing the most high-tech chips out there, especially within the Western world. And ultimately, Nvidia is based out of the USA, and as a result of that, the topic of China and that kind of thing, in China then buying those chips has become a very important topic of conversation, especially as we've covered many times on this channel, the kind of growing trade war between the West and the East of the world, it does seem like, or the kind of geopolitical West and geopolitical East of the world, where we do find ourselves kind of between the US and China, and China and the US are kind of fighting it out when it comes to trade. And ultimately, one of the key policies that have been implemented by the Biden administration regarding kind of trade policy, regarding these AI chips, is in fact the kind of trade controls, the US controls on the semiconductor exports to China, as this has kind of been a very interesting topic. And we can even link this back to Russia's invasion into Ukraine, where we started to see Western nations shut down any exports to Russia regarding these AI chips, or any computer chips really, because ultimately in all of these kind of advanced military hardware that we kind of see being used on the modern battlefield, most of these technologies are powered, of course, by computer chips. They need those computer chips to function to the way that they're intended, and therefore it's kind of in the West's interest in this situation to protect their own militaries through preventing such computer chips reaching their kind of geopolitical adversaries' military hardware. So that's kind of what we've seen, and that's what we've seen specifically regarding the US and China, when we're talking about these AI chips and that sort of thing. Ultimately, though, what this article is kind of noting is that really that hasn't had as much an effect as the US was intending. And in fact, Nvidia is set to make around $12 billion from the China market alone, which is quite absurd to think, of course. Now, of course, we've spoken about Nvidia itself to a great extent. Nvidia, of course, now being a $3 trillion company. That's how much it's worth, it does seem like. And of course, very recently it kind of spiked and managed to push into the most valuable publicly traded company across the entire world. So of course that was a very big achievement for Nvidia, and that saw Nvidia passing the likes of Apple and Microsoft that we've seen within the tech world for plus 20 years or so. So really that was a kind of big move by Nvidia, and that's why this topic has been of such importance to kind of cover, as not only is it kind of an important thing to look at when we're on the charts and that kind of thing, but obviously just even the topic of Nvidia itself massively will affect the kind of way that investors perceive the US economy, look at new opportunities, and therefore the way the stock market might move. And it's even kind of crazy to possibly say, but once we start to see companies get this large, we really start to see even US government policymakers starting to factor in the effects that certain policies might have on these large companies, which obviously offer great value to the nation itself. And Nvidia is certainly offering that, especially through the technology that they're producing. So this is definitely a very interesting article to note, especially because we're kind of during these times of peaking world tensions, and of course, the kind of topics of a China and Taiwan war, and the topics of kind of skirmishes between China and the Philippines is definitely a hot topic at the moment. And so this topic is always very important to cover. And if we just think also about the other trade wars that are taking place with the EU and China, think about the kind of tariffs have now been placed on Chinese EV exports. This is all a part of this wider trade war, which is seemingly heating up. And ultimately, as we head into the election season with Donald Trump, kind of campaigning on, once again, kind of a hardline anti-China front, then ultimately are we more likely to see more of these hardline, US controls being implemented regarding trade with China, and therefore what we likely to see with the kind of performance of something like Nvidia or other US tech companies which are exporting a great deal to China. So definitely keep your eyes on this topic. Now, these chips are designed to fall outside of the US restrictions, with the $3 trillion tech giant planning to deliver more than 1 million of their new H20 chips over the next few months. These chips are designed to fall outside of the US's restrictions on selling AI processors to Chinese customers. This figure is absurd, since the Chinese competitor to Nvidia, Huawei, is expected to sell half of that Nvidia is planning to sell. With this recent news and the growth of Nvidia, leading the tech giant to become caught up amidst the geopolitical struggles between the US and China. Since the Biden administration and even most Republicans want to stem the flow of the most powerful US chips to China out of fears that this will empower the CCP. Those fears regarding the CCP are centered around the topics of AI systems and the potential military applications that these chips offer. These sanctions on chip exports to China have certainly started to take effect, with these controls creating a shortage of AI chips in China and thus limiting the ability of Chinese tech groups to seriously compete with the likes of US-based OpenAI, Microsoft and Google. An interesting note to make as well is that each of these H20 chips cost between $12,000 and $13,000, and thus it seems like Nvidia will generate more than $12 billion in sales. So a massive figure there, and of course this article is a very important one and a very important topic. Definitely keep your eyes on it. That's all to talk about in this article, though. Next article to talk about is more so to do with the ECB and the topic of inflation, interest rates and that kind of thing, which of course is kind of a more relevant topic to us when we're talking about macroeconomics and how that's affecting especially foreign exchange markets rather than US indices maybe. And here, of course, rather than talking about the Fed that we were talking about in yesterday's morning market briefing, we're now talking about the ECB and the ECB's minutes, not the Fed's minutes like we spoke about in yesterday's morning market briefing. But of course, this is a very important topic to cover on the topic that we're always covering when we're talking about the ECB, which is of course rate cuts. Now, a number of ECB officials have now made clear doubts over cutting interest rates back in June due to the levels of inflation and wages. This comes in a recent meeting minutes release from the ECB's latest interest rate decision, where certain officials worried over inflation and wages rising, not falling. Now, of course, we're all talking about this topic, as I've previously mentioned, but yes, that kind of decision where we saw the ECB cut interest rates from 4% to that 3.75% was obviously a massive, monumental decision. And of course, it kind of marked the first of the key Western central banks that we look to, the first of those Western central banks to actually cut interest rates, make that first step. As we've seen the likes of the Bank of England, talk about cutting interest rates. We've even seen certain policy members, a part of the MPC, pardon me, the Monetary Policy Committee, also advocating and calling for cuts, but we still have not seen our first 0.25 percentage point cut from the Bank of England just yet. And as a result, we can't, claim that they're going to cut interest rates anytime soon unless they, seriously indicate that, and then we can, of course, use that information. The Fed, the same, whilst, at the start of the year, alluded to cutting interest rates 3 times, by that 0.25 percentage point mark. Ultimately, now they're only expecting to cut interest rates 1 time at that kind of 0.25 percentage point interval. And ultimately, the important thing to note there is we're not even expecting the Fed to really cut interest rates until September at earliest. And so, really the ECB has been the only kind of central bank, a part of that Western sphere of influence, that we've really looked to regarding, interest rate cuts and that kind of thing. And of course, their decisions have had a massive impact on the markets already, with the likes of the euro selling off against the dollar quite significantly, and we'll definitely come to that on the charts. But certainly this article then provides a kind of contrary picture to us, and ultimately signals to us that there's still some hesitancy within the ECB, and that's kind of very important to note, of course, since it reduces those chances that we'll see another interest rate cut in the next meeting, or even the meeting after that, as of course we've heard time and time again, the presidents of these or the chairs of these central banks have repeatedly said that we need to kind of wait to see how those interest rate cuts take effect, what inflation is and that kind of thing, and waiting for more data. So a very important article there, and we'll definitely come to the euro on the charts after this article to further contextualize this topic, with the ECB saying on Thursday that some members had argued to keep rates level. A key point on the topic of inflation was made regarding the topic of services, where inflation seems to be proving stickier. Whilst this discussion is centered around the last interest rate decision back in June, it's relevant to us because ultimately it allows us to understand that it's now less likely that the ECB will cut rates by another 0.25 percentage points this July. So definitely keep your eyes on this topic, very important indeed. And as I just said, we'll come to the Euro USD in a minute. But that's all to talk about on the articles. Next to talk about, like always, is of course the charts. If we can load that up. And like always, once again, we're beginning on the US 30, talking about the Dow Jones, where some interesting action is playing out, but still we're kind of in this period of consolidation, this period of ranging really, where not too much is happening on maybe the 4 hour, but when we zoom down on that 1 hour, it's easier to start noting things that are taking place. Now, staying on the 4 hour for now though, ultimately we can note that price is staying within this kind of range that has formed. If we kind of just factor in what price action we've seen over the past week or two, then it's easy to note kind of what price action we're seeing right here. And that is ultimately that we're seeing price just, continue this sideways movement. Arguably, this is because of certain news coming from the presidential election, with the debates, and the kind of conflicting news that we're hearing from the Fed. I've kind of repeatedly noted that could be a kind of reason why we're seeing such sideways action in the US markets. But ultimately, it's hard to kind of know what's going to come next for the US 30. And really, when we start to see this sideways action, those kind of key liquidity zones, those key support and resistance levels that we use to kind of better understand and analyze those markets starts to become less clear. And ultimately, we can kind of note that with this key liquidity zone, which price is kind of repeatedly pushed through and ignored. But ultimately, price has reacted to it, acting as an area of resistance and support, a few times, and therefore, it is a level which we still have to kind of recognize and respect. But still, it's kind of hard to get motivated when we're looking at a market like this, especially on that 4 hour. But definitely keep your eyes on, the US 30, as we are now kind of at the top of this range. It does feel like, with price slowing down and ultimately consolidating somewhat. And therefore, we do always have that chance of a consolidation, then breakout to the upside. So definitely keep your eyes on the US 30. Some interesting action playing out, of course. Next to talk about, though, is, of course, the dollar, where, we've seen price sell off over the past over the past week or so, actually, where, of course, on Monday, we saw price jump to the upside after, breaking to the downside and reacting to this lower level of liquidity. From there, we saw price swing to the upside, as I just said, and then react to that 78.60 Fibonacci retracement level. We did note though that there was a chance that price would stay within this range, but ultimately within this rally. But ultimately, I did note how it looked like we were starting to form that kind of head and shoulders pattern, and therefore there was kind of that serious chance now that we would see that sell-off take place, with price then finally breaking out at this level. And in time with those FOMC minutes comments that we did here, which did kind of note a more dovish perspective maybe from the Fed, we did then see this sell-off take place for the dollar, kind of in the inverse to what we'll come to on the euro. And as a result, we've seen price sell off to the downside, break below that key liquidity zone which price reacted to on Monday, and now price has broken through that, as I said. But over the course of yesterday, price reacted to this lower level of liquidity, retraced, and then reacted once again to that area of liquidity that was previously used as an area of support and now is being used as an area of resistance. And now it seems like we could definitely be on the swing to the downside, so definitely keep your eyes on the dollar. Very interesting action taking place. It'll be interesting to see whether we can end off the week with price breaking below this key liquidity zone, or in fact will we see price now kind of stay within this range which is seemingly forming. Next to talk about though is the euro, which of course I alluded to earlier regarding those ECB minutes, which whilst throughout the entire week we've seen this kind of serious bullish momentum enter the euro, I did note in yesterday's morning market briefing how price had kind of moved so high now that it was now reacting to those higher levels around that 78.60 Fibonacci retracement level, and therefore there was always that serious chance that price would sell off from that level and possibly continue lower, even to the areas around that minus 27.2% Fibonacci extension level, which lines up with those key liquidity zones that we've previously noted out. So that was kind of the topic that we covered yesterday. Now, what's happened over the course of yesterday in the markets? Well, ultimately price continued this move to the upside, this slow grind to the upside, as a result of the kind of more hawkish messages that we received from those ECB minutes bulletin releases. And therefore, price is now sitting, directly at that 78.60, and we'll really have to kind of see how we end off the week. And I definitely think keep your eye on the euro today, as the way we end off the markets, especially with the British general election, especially with kind of different news coming out around the world, but especially to do with topics in Europe, it'll be definitely interesting to see how the euro does perform, as we also have to factor in that the French elections also taking place. I'm not sure whether it's this weekend or possibly Monday next week. So definitely keep your eyes on the euro. It's very important to see how we end, whether we sell off or not. Next to talk about though is pound yen, which has seen a kind of mini retracement, it does seem like, over the course of Thursday. And that was kind of some price action that we did start to expect when we started to see this kind of, this top that was seemingly forming, with price spiking to the upside and losing momentum. And it does seem like we have now experienced a mini retracement. I've drawn out the Fibonacci retracement tool just to kind of note that out and note the levels which maybe price is interacting with, and now is preparing to bounce off to continue this massive rally that we've seen take place for pound yen. So pound yen does seem like it's bounced off that 38.20. It'll be interesting to see whether price can continue from that level and possibly reach those Fibonacci extension levels around minus 27.2. Definitely keep your eyes on pound yen. Next to talk about is Bitcoin, which has just continued this sell-off, and ultimately that 6180 Fibonacci retracement level and key liquidity zone that we noted out, I think even last week, but definitely to start off the week on Monday, we noted that level as an area which price was likely to interact with and was interacting with, and ultimately there was a high probability of a sell-off from that area, and we've really now seen that play out with price selling off to the downside after reacting to that level. So definitely keep your eyes on Bitcoin, as price has now arguably tapped that minus 27.2% Fibonacci extension level, but possibly could even continue lower, as price has now broken that floor of $60,000 a Bitcoin level, which is so significant, of course. So definitely keep your eyes on Bitcoin. Next to talk about though is gold, which is currently just sitting at the top of this kind of this level. Well, not at the top of this level, but ultimately over the course of the week, price did rally to the upside following the more dovish comments in the Fed's monetary policy meetings, and as a result of that, we have seen price rise to the upside. But now over the past day, over the course of yesterday, price did stall out, consolidate at the top just below this kind of key liquidity zone on these recent highs made around the 21st of June. So definitely keep your eyes on gold. It'll be interesting to see whether we sell off because we're sitting at this level, or in fact is price just preparing to break out now and break above that kind of key liquidity zone. So definitely keep your eyes on gold. Lastly to talk about though is oil, which is now kind of pushing higher. I need to go on the 4 hour, which is now kind of breaking out of this level, which breaking above the kind of recent high that was made on the 2nd of July. And very recently, price of course reacted to that 38.20 around the $86.75 a barrel level. So it will be interesting to see whether we can continue this push higher over the course of Friday, as the topics in Middle East do heat up. The kind of topic of a wider regional conflicts do heat up. So definitely keep your eyes on oil. Very interesting price action taking place right there. That's all to talk about on the article, on the charts though. Last to talk about, like always, is the economic calendar, where we are receiving quite a bit of economic data today. So I'll try and get through it as fast as possible. Now, firstly, we're receiving the Japanese household spending figure, followed by the French balance of trade figure, and followed by that the French industrial production figure. Followed by that, we're receiving the Swiss consumer confidence figure, as well as the Eurozone and Italian retail sales figure. Followed by that, we're receiving the Spanish consumer confidence figure and Canadian unemployment rate figure. Followed by that, we're receiving the NFP figure, and lastly, the ECB President Lagarde's speech. Ultimately, though, that NFP figure is the most important figure of the data listen out for, and will massively affect that the kind of sideways movement that we've seen on US indices over the past week. So definitely keep your eyes on all the economic data points that are coming out today. But ultimately, we cover lots of on the economic calendar. But we cover lots on the articles, lots on the charts, and lots on the economic calendar. Hope you have a great trading day. But that's all from us at Wildwood Capital. Have a great one. See you later. Bye.